Hi, good evening, everyone. Once again, nice to see all of you. I think few of the people on the first table, second table have left already, or maybe they must be doing a networking outside. But first of all, thank you, Bishop, for being a filler and moderating a session just some time back. It was really nice to have you here. And this is going to be the last session of the day. And we have planned the agenda, in a very meaningful manner. We started with shadow banks in the morning. That was the first panel. Then we spoke about digital lending, which is the new, new avatar of the NBFCs and the fintech companies. Then we spoke about strengthening co-lending and whether it's sustainable. Then we spoke about the customer experience. And now overall, we'll give some dopes to the readers, audience, and for all of us in terms of how to strengthen NBFCs, how should we scale them up. So I would like all of you to share first your views on how should we scale up NBFCs going ahead. I mean, digital lending has been supportive, co-lending has been supportive to NBFCs. NBFCs are out of the typical shadow of the ILNFS and DHFL. So things are very nice for NBFCs, future looks bright, but the question is how to scale up and how to reach to a next level. And Dr. Raveendran, I will start with you from here, and then we'll take your views from all the other panelists as well.
Good evening to you all, and thanks, Amul. See, scaling up in our perspective, like I represent, a small, medium level NBFC. What we aim, in fact, it's in our business plan is like, more, that is horizontal and vertical growth. Horizontal, what I mean, opening more branches. Currently, we are X, at least we are aiming at least 2X in the coming year. Vertical growth, obvious, it is like, adding more business areas to our current business. We are into one or two products. We want to add up more products also. That also got identified. And to augment this, the growth will not just like that happen. So whatever we discussed today, I think that is still lingering in our ears, like co-lending, digital lending, adoption of that with the suitable digital technologies. And another very important thing is, touching the real target of enhancing the customer experience. I think that's an important area that will support, scaling up of NBFCs. I think these are the ideas we have, to scale up our NBFC.
Okay. Yeah. Sure, I will come to you, Prasen, and take your views.
Yeah, so good evening, everyone. My name is Prasenjit, and I represent Vividi Capital here. And for us, scaling up was, of course, sir mentioned about the horizontal scaling and the vertical scaling. And our model always was focusing on tech so that we can scale up. Our model was never into that, we'll be opening the branches or we'll go to a direct retail context and then we'll grow. That is never our, business model. We are a B2B NBFC, and in this basically we, we invested in a platform. We created a platform where basically we can bring more of the co-lending customers there. So when I'm saying co-lending customers, that means the co-lending, the other NBFCs who can come to our platform. And on top of that, basically, we engage into a 100-0 or kind of 80-20 kind of a partnership. We adopted cloud because we understood that, some for the portfolios like the institutional that we have or a supply chain finance that we have, for that, we have a kind of, you can say, on-premises server, like, with a data center and a disaster recovery and all that. But for this co-lending business, we adopted cloud at the early stage. And on top of that, wherever possible, we tried to broke down the process. And after breaking down the process, we targeted every process with some of the AI component, so that we can reduce the time, so that there is no human effort. So let's say you are doing a credit evaluation on a retail context. So you go, some branch manager will be going and meeting the customer, or let's say after that the credit manager will be visiting the customers and trying to get the data, evaluate the credit and all that. But we don't do it in that way. Whatever the data that we get from our co-lending partners, we put it in our algorithm, and then basically the algorithm throws us the decision whether it's a yes or no. And that gives us the scale. So when it comes to scale, so we Sometimes during the year end and all, we process, literally 10,000 loans, per week. And in that, basically, we get the decision making completely out of the system, and that helped us in scaling up. That was something that was the turning point. And if you look at Vivriti's growth, we started back in 2017. And by 2023, we are, one of the largest NBFC in terms of the AUM in the country. So that's the growth story that we have here. Thank you.
Sure. Ajay?
Yeah, I'll sum it up on a very simpler note on my story over here. I come from a company which is 50 years old, which is celebrating its golden jubilee this year. I represent the Shriram Group, and to put a number against it, we are 2 lakh crore assets being managed with a lakh of employees in the group with 3,500 plus locations. Now, if you want to scale up an NBFC of this size, the challenges and the dimensions which you need to solve for challenges is completely different. Now, when I talk about challenges, now, while we all talk about a digital transformation, one part of it is creating digital assets, right? When I talk about digital assets, it's about creating a website, creating a mobile app. In fact, we are in the process of creating a super app. A quarter down the line, you'll also see a new super app of Shriram coming up. It's called Shriram One. Now, while we create all these digital assets, our entire investments which we made over the year is the strength of the branch and the people that we built across. Now, when I really want to scale, we look at simplifying processes which can really help our executives on field give instant decisioning. Like, for example, I'll take a classic case of a product which we sell today. It's a two-wheeler loan. Now, can I give a two-wheeler like how Swiggy delivers food at home? That's one of the statements which I have today, which I want to really solve for. And that's the work and the mission that we are actually on. Similarly, we are big in the trucking ecosystem. A lakh crore of our assets being managed comes from the trucking ecosystem. Now, if we really need to solve our problems in the trucking ecosystem, we need to figure out what are the real world problems out there, understanding each of those ecosystem parts so that, we'll be able to solve for solutions. What are the problem statements in terms of creating newer product suites, which will keep our customers engaged, right? Now, for example, a working capital loan in itself, can it be a floating line? Can it be an opportunity where customers could repeatedly engage and draw down from our line so that people are using opportunities which are available and then keeping on repeatedly coming back to us in terms of how the credit line is being consumed? So product is one such area which we see we focus really hard on in terms of creating more and more opportunities, which is serving to the niche segment of customers that we handle. The second piece is solving for using digitization. How can I go paperless? How can I give a faster TAT to customer, or, and at the same point of time, how ease and simplified are our processes where we can also ensure our net promoter score for our customers are pretty high. So these are the core goals which we carry off, and that's what we really think is going to scale up our NBFC for the future.
Okay, quite meaningful from all of you. Nikhil, let me come to you and take your view.
Hi everyone, thanks for the session. So I represent DMI Finance. We are a digital NBFC based off Delhi. So we see the problem as two parts. One, if there is a need for credit, we are a lending institution and we believe there is a huge need for credit across the country. As a country, we are really underserved on the credit and everybody needs a credit. So much so that our motto or our chairman thinks or GMD thinks that every transaction is a credit transaction. So having some food in the restaurant, till the time you have not paid for the bill, you are having a credit, and once you pay it, then you are equalizing it. So there is a huge need, and how we can give that credit is probably the part of the solution. We have always been a digital company. We want to think of every problem as a digital problem and how we can solve digitally. Not only on we want to be we are a B2B2C organization. We want to be completely digital, and that's how we were born. On the scale, we have been doing 15,000 loans per day on the daily basis. And last Diwali, on the Samsung, where we have a huge OEM partnership, we did 50,000 loans per day. So 50,000 devices of Samsung sold through us every single day for on 3 days. So there is a huge potential, and I think the whole potential can be leveraged only if every process, not the critical processes, but every process could be broken down, every process could be thought of as digital, and the whole technology is put behind it. I think there is a lot of paradigm shift which has happened because of the cloud. You don't have to scale up the business, to scale up the processes. You don't have a bulky server requirement. You don't have any major processes requirement. You don't need people. You just only need the right solutions, the right infra, and everything else could be on the cloud to solve.
Okay, so physical, digital, and the scale up, I think the important topics and the perspectives that you shared here. Let me get into some specific, and I will start with you, Dr. Raveendran. I will move to digital a little later, but when it comes to the expansion or scale up specifically into the rural areas or maybe a hinterland, since you're the oldest NBFC here, right? How is it for you? What does it take for you to scale up in the rural areas? Or if I put it also very specifically, are you expanding in rural now, or you just stopped expanding and thought of going only digital?
No, in fact, this is one of the core objectives of our business. Like, we call that as going local or meeting the unmet and reaching the unreachable. I think these are the taglines at which we are working. Lot of potentials are lying for any finance, in fact, including our vehicle finance in the rural areas. I'm talking about cities going inside. So what we are doing now, instead of opening branches, one is like we open customer service points. It can be Soho. In fact, that particular marketing officer, he resides at home and does the business. Does the business and collection also. In fact, the model how we worked up, his wife or somebody at home can support that. That's a model. So that we penetrate, because we are currently South India based, especially that model is working well for us in Tamil Nadu and Kerala. Go to the interior part of it. I think, in fact, our outcome also is very good in that. So, and here for what specifically we do is, sometimes we give some specialized offerings to them in a way of like relaxing some norms. Suppose for one vehicle we give X as a value, there I think probably we can give X plus 1 and some relaxation in the norms, personalized services. So with that I think we are really seeing a good benefit in that. So hereafter, instead of just opening branches, we have thought of having this lot of small office, home office setup. So that will help us to grow also, to scale up also, in fact. Yeah.
Okay, sure. So Prasenjit, let me ask you a very specific question in terms of scaling up digital. So what are the approaches that the NBFC should take when they scale up digitally? Because that's one aspect of growing specifically vertically or looking at the next growth. If you could highlight a couple of areas that they should look into.
Yeah, so I have already mentioned in the first question, like, one of the, we belong to this tech world, right? Like, and even when I came to this banking world, there was a lot of orthodox thinking that, we should be into, kind of a data center model or an on-prem kind of an infrastructure and all that. That probably delayed a lot of digital adoption during the early years. And I feel that, if you are an early adopters of cloud and you leverage the cloud option, there are multiple options that you get in any cloud service provider today. And if you leverage that, automatically you can build a system which will reduce the process inefficiencies. That's what I believe. And and on top of that, you should also leverage the technologies in such a way that bring out the deliverable technologies for your processes. I have also mentioned about this, like you should understand your business and break down the business, the entire flow into multiple processes. The entire workflow You should be, breaking down in such a way that, let's say, I'll give it a classic example, like in our entire institutional business process, there is something called, AML check that you have to do, right? Like, you do a anti-money laundering check or a PPs or this kind of a check. So earlier a process was that we had a monolithic system which cannot be integrated and all that. And any case that you basically punch into the system, and then basically all the company's information and the director information has to go to the compliance team. Compliance team will basically, they will manually check that and they will give a go ahead, go or a no-go, and then only you can process it. And that is to delay this entire thing by, let's say, 3 to 5 days, and sometimes you should struggle with that. So we actually implemented, this entire AML check is completely automated, where all the databases that we can think of, right from your SEBI to RBI to, as because we have AMC business also, so we have, this entire, the world check database also that we have to do. This entire AML check happens, just in a fraction of a second. And any information, let's say there are 5 directors or the company information that you put, within fraction of a second you get that information whether it's a go or a no-go. And then basically only the, let's say balance 5% or the 10% cases which are like no-go kind of a thing, their compliance team is basically taking the decision. So this is a classic example I'm just giving from my organization. Right. And you have to understand, being in NBFC business, you have to break down the processes, and then you have to understand where I can bring efficiency. And I should not bring efficiency by changing some process or by changing, adding more people. I have to think that, how to bring the right technology to, make a better efficient process.
Yeah, very valid point, Prasen. So, ladies and gentlemen, I have a couple of questions for the panelists, but if you have any specific questions, be ready with that. I will come to you very, very soon. So, Ajay, my question to you is very important one, and there is always a difference. Everybody wants to scale up, and digital is a need, but spending on technology, okay, the cost is also very huge, right? When you have to scale up, digital is, there is no alternative to digital, and you have to spend a lot on technology. So your budget for technology, how do you justify specifically when you are investing at your company, against the revenue perhaps you will generate in future? So how do you actually look at the ROI out of the technology that you're going to generate? Because for scale up, I'm sure you will have to give that analogy to CEOs, right?
So I'll throw a simple perspective over here, especially from our company side. We are operating in customer segments which are there across multiple realms or segments, right? When I talk about segments, let's take the classic case where India is divided into 5 Bharats, right? Now each segment requires a specific need in itself. So the moment you go at a product level, something which you do for HNI versus what you do with the lower mass or the mass segment, the treatment of each product is going to be different. Now when you break down each of these products and go further deeper, you'll actually figure out what is that which you really need to be doing instead of going on for a common technology. Like for example, for me, I might go about signing up a marketing platform on my own, right? Or a CDP, a customer data platform. Now the point is there are so many solutions which are available in the market which can give me an entire gamut of services, but it does not really serve my purpose. Now I need to be clear at a product level what really works for me and what are the checkboxes which I really need to be ticked upon before even evaluating a partner and then getting them on board. And that clarity of thought will actually give us the cost which you really want to optimize. Now the second point is once you get a technology on board, or a platform on board, the opportunity to scale up, what were your limitations and what were your efficiencies? If you have a metric which is built around it, you know how much can that scale up to, and you define what your KPIs are going to be for that particular tool or a technology which you're trying to implement, or it could be even from an infosec perspective, right? If there's a risk which is available, how do I look at solving for it? So each of it well defined by its own KPI is going to solve for a lot of problems, which in terms is a cost which can be baked into the entire system than taking in a complete universe of cost altogether. These are the line items which we clearly follow at our side. And the next piece and the next most important piece is that not just implementing technology, a road does not end there. The role of a CDO is completely different to what it is from a CTO, right? Now, a CTO's role is implementing technology. The CDO's role is not just implementing technology, it goes further beyond in ensuring that how does revenue translate into by implementing pieces of process or also getting on board a new partner for technology services? And what kind of ROA for a particular product are you looking at measuring? And how much of your profits is it going to eat into these particular costs? The moment you're clear about these matrices and all these moving variables for a particular product, I think we are pretty much safe in terms of what our clarity for a technology investment is going to be.
Okay, that's quite realistic, Ajay. So Nikhil, I understand that you have large number of partnerships, and I really like the example of 30,000 devices that you sold, and that's the kind of bandwidth that you have, and demand also, right? So when we speak about scale up, and when we envisage or visualize the NBFCs of future, how do you see the scale up will happen? Do you think that it won't be a single entity doing only business, but it will be a multiple partnerships? Maybe your NBFC will have thousands of partnerships, hundreds of partnerships with different vendors, e-commerce companies. This is how the future is going to be?
I believe yes, in a short way, because individually, like everybody, I have been listening through the sessions, there are so many NBFCs, so many players doing so many different things. Everybody probably cannot be doing all the things in a single go. So, and again, not from a technology perspective, that's where the open APIs, open business comes into play, where multiple players having different solutions can merge together and give a better results to everybody else. So there is a demand, now there is an embedded finance, there is a need for finance on the normal consumer loans. There is a huge MSME segment which is underserved, which can be served. And all these things can only be done when you have an open API stack, people can collaborate, businesses can collaborate, and there can be a common solution. And I think for a NBFC for future, there could be three possibly different things apart from the, what Prasenjit has been saying on the business processes. One is the open APIs, second is the data, and second is the cloud adoption. If all these things are done in the right vision with the right strategy, there could not be any limit to the scale which we can achieve.
Sure, I have 2-3 important questions, but let me stop here and take the audience check. If anybody has any specific questions on the scale of businesses, please go ahead. Can we have a mic there? At the back end team, can we have a mic there, please?
Hello, this is Manoj Patel here from FXM Tech Financials. Considering the scaling of NBFCs, specifically you had mentioned about MSMEs to be focused, right? Or where there is a huge mass, right? And considering return on investment, because we see that there is a a limited cap. How do we scale on the margins, return on investment, right? So what would be the different scenarios or where one could increase your return on investment, right? So 3 top factors or the methods one could adopt.
You want to know return on investments? How to look at?
Making more profits or making more return on investments.
How should NBFCs make more return on investments?
Yes.
I mean, the easiest answer is they should
I mean
lend more.
Yes. So lend more. So one factor is lend more.
Right.
Everybody
I copy
that,
you.
right?
Let me see whether Ajay, do you want to answer that or?
So I'll take a completely different take on your question, right? Now, while we talk about scaling up NBFCs, now what we really don't factor in today is how do we look at, I'll stand with the Pareto principle here. Most of your existing customers are the ones who are going to contribute to a lot more future business which is coming on board. Now the point is when you look at your entire ecosystem and an NBFC's customer who's on board, the opportunity to tap into the life cycle of a particular customer is something which is usually underplayed or cut down completely, right? Now, to put it in a nutshell or a metric which you would want to quantify, if you've got a customer on board, how many products have you distributed per customer? How much of fees have you made out of your particular customer is the opportunity and the metric, so that you will be able to create more and more opportunities to ensure that customers are willing to take products which are serviced by you, which are offered by you as well. So that's going to be the key in terms of how numbers are being driven, and that's typically the ratio what you would see on a P&L, right? What is your non-interest income, which is also going to come in from an NBFC perspective. So that gives you the scale. So these are the three things. FPC, which is fees per customer, PPC, which is product per customer, third is your non-interest income. So these three things, if an NBFC is focused upon, I think there's a lot more opportunity to scale for a particular NBFC.
Sure. Can we have the mic there? Yeah, please go ahead.
Hi, I'm Sudha. I have 2-3 small questions, if you don't mind, and I'll probably continue from where you said the product per customer, right? Given the different kinds of businesses, the new age business that we're coming up, and I try to specifically mention about the rural sector businesses that we're coming up. Do you think the niche business segment that NBFCs are right now catering to would really make sense, or the diversification becomes important because banks are definitely not comfortable lending to the rural sector, and NBFCs are people who can tap into the rural segment, and doesn't that become very important that NBFCs actually go and try to give different products to the rural segment and then scale up business, or would niche still make sense?
So I'll try to take a different take on this. The market for UP and Bihar is probably again really underserved because the delinquencies are high. But for us, for all the loans which we are doing, the major portion of that loans is coming from UP and Bihar. And now over a period of time with continuous learning, we have developed an understanding of that market. So I'm just extending your question to, there could be a market which is currently not being served. The potential has not been captured, but there could always be a lot of scope on those markets, because the niche customers, niche segments, everybody else would always be tapping into and would try to serve.
Okay, sure, thanks. Any other question?
Am I audible?
Yes, go ahead.
Yeah, actually I'm from a different background. I'm a software developer, but I would like to understand a few things. So we have a lot of data to underwrite a loan, like account aggregators or OC, and so can we use the data to let's say how the person getting loan is how they are spending, whether the data which we are getting through account aggregators can be used for that purpose, whether the given disbursed loan amount is spending in a right way. Or do we have any technology to track that, how they are spending the disbursed loan amount?
I can take it.
Yeah, sure, go ahead.
Yeah. So to put your question into a right perspective, right? So the first piece is having data, right, and organizing the data in a way which can be consumed. And for what particular purpose is that going to be? Now, when I look at underwriting a particular customer, I would be looking at data which is going to create an impact for me in terms of making my decision making. Let's say, for example, if it is going to be a loan of 1 lakh rupees and the customer income is roughly around 40,000 rupees, what kind of FOIR are you looking at working out? Now, the point is, one, there is declared source of information which is available. The second piece is data which is validated through other sources as well. Your confidence on a particular customer always grows. And in the future, how I see it going is that it is not just information which is available about a particular customer. Using data, you can also solve for lookalike customers. Let's say, for example, there's a software engineer of a certain company which is category A, and you marry it with a particular score which is available for a different customer, and then you don't need to really collect all the paper and the documents which is needed for his other loan. You can look at handling it in a much better way and giving him a seamless experience of giving him an instant approval or a pre-approved loan so that the loan can be consumed as early as possible. So data is definitely going to be democratized, which is going to happen with obviously a lot of new initiatives like I would say an OCAN or an account aggregator on itself, right? So that's going to enable and help scale up the number of opportunities available. But the most other important point is what happens to the segment where there is limited or no data available. Now, when we look at our own country, we see that in my typical case, I see that 48% of my customers who come on board are people who have a bureau score. We are a very financially inclusive company, and that's why we see 52% of customers who do not have regular credit ecosystem or a regular bureau also. So how do you look at underwriting these customers if there's lack of data? So these are different problems which need to be solved in a different way altogether, and that's what we are trying to solve for. And that's where some of the information which is available, we try to draw parallels out of it with integrating with partners and getting alternate source of data so that we'll be able to scale it up in ourselves.
You want to add something?
Yeah,
Yes, please.
I can value add what Thomas said. Sure. See, what you are preferring is an interesting area, but that aggregator aspect, whether you get all the superset of data, I doubt actually, like Thomas clearly indicated. So you take in our case also, we take lot of decisions based on the past data, because in our thing, the peculiar part is about 60-70% of the customers are repetitive customers. Only 30 is the new, and we are aiming to get more and more new things to scale up part. But a decision making, whether I think we call that as a green flag. Right. Like the moment he submits application with minimal time, whether the loan can be sanctioned or not. Otherwise, normally we take some X hours or so. So the data is a big opportunity, like you can interpret. The same way collection also. Whether that guy, whether next installment, whether it will come in time or not, we can predict. So that sort of opportunity areas, definitely we can pursue upon. You can try that.
Sure. Any last question? Yes, the lady there. Can we have a mic there, please?
Yeah, hi. This is Saroja from Chola. So I would like to have one question when it comes to the scaling up. We had some sessions, before about co-lending. So the typical challenge, what everyone from the stage was talking about is the system integration when it comes for co-lending, especially. So I would like to know from your end, so have you also faced the same issues in terms of this IT integration or system integration when it comes to co-lending especially? And if yes, then how did you overcome that, or how are you, looking forward to?
Okay.
Yeah, thank you.
Yeah, so typical problem in scaling up in co-lending is basically the asset class. So today if you see, like let's say you build your system for a, let's say MSME kind of an asset class. And in that, let's say you design your system, you make your system such that there are, let's say, X number of data points that you have. And then on top of that, you bring a partner, and then you are basically integrating that partner to your system. And the next month, your business team will bring another asset class, kind of an NBFC. So let's say that is on a commercial vehicle. And there, sir, as you know, there would be, the data points would not be as same as a MSME kind of a loan. The data points are going to be extremely, extremely different, where you have to take the chassis number, the vehicle numbers, and all that, right? So the biggest problem that we have to solve in the co-lending business is basically the asset class and asset class type. So when we are designing this system, of course, we initially started the system and all that, and then we realized very soon that, if we are not able to have a breakthrough in this asset class challenge, we will not able to be a successful co-lending partner in the country, right? And then basically the way we have designed our system, that it can accommodate at least a 36 type of asset classes that you can think of with different variations. So today we can go and talk to any partner, probably any NBFC in the country, where we can go and tell them, okay, what is the asset class that you have? And depending on the asset class, basically these are the number of data points that will automatically pop up, and you take my APIs and you start integrating. So that's how we solved it. probably you can look at that. I mean, probably you can talk to your tech team and tell them to first figure out, I mean, they should not build a system just by looking at one partner, okay, I have got one partner and let's try to build a system. They should actually look at it holistically and then basically think later on how to accommodate more and more asset classes so that any partner tomorrow you're getting into a co-lending engagement, your system would automatically support that. I hope I answered your question.
Okay, sure. Thank you. So coming back to all of you now, I have one important question in two parts, and that's going to be the last question to all of you. So I will start with you, Dr. Raveendran, and the question is specifically about how the regulator has become active in last couple of days and whether that would be in a way a hurdle for new or emerging NBFCs to scale up very aggressively. And let me take this IT outsourcing part. So while every bank, every NBFC, every company is going very, very aggressive in adopting technology, RBI has formed its own rules, right, in IT outsourcing. How do you see that? Do you see it will maybe, I won't say a hurdle because ultimately whatever regulators say you have to adopt it, but will it delay the process of scaling up? Will it delay the process of expansion? How do you look at those guidelines?
This is a very relevant question, Amol. I feel it is a boon for the NBFCs. Whatever the, I think, regulations, RBI and other bodies they are imposing, I'll probably park that outsourcing now. I'll just a little bit go back. See, 2017, RBI, they came master directives on security, information security. In fact, though we were adopting information security earlier also, that in part was very useful for us to further strengthen the information security part. In fact, at the time, our board recommended to go for ISO 27001 to sustain it. So we went for that. This is a blessing in disguise sort of thing and all. Again, RBI master directives, another draft direction is released. We are going to get, that's again, there's going to be a lot of regulations on that. Though as a CIO or the company, initially they may feel it will be painful sort of thing and all, but I strongly feel it will be very helpful. Coming to the outsourcing policy, what you referred, I went through that. A lot of, I think, formalities we have to do, but still I feel it will be useful for the company to protect the assets of the company from the outsourced vendors inadvertently, whatever it may be. So in my version, definitely these regulations, whatever is coming up are definitely beneficial to the company.
Okay, sure. Prasenjit, I also want you to add on the same.
Yeah, so of course, any regulatory ask, that is something that you have to respect and you have to implement. That is, but I don't think it is going to be a challenge for Vivriti as an organization because we are completely in-house kind of a platform. Our outsourcing piece could be very, very minimal, but I have gone through, I mean, the overall documentation of RBI which has come, the circular that has come. So I think by 1st of October 2023, we have to implement that, right? In that, I have gone through it. I think the controls and the whatever that they're asking is, I think, is going to help the NBFCs. I don't think that it is going to block the scale up. I think it's going to help. It's more of a better structured, one of the example, I was just going through it. It's like you should have a proper agreement between your the third-party service provider and yourself. I think somewhere it has to be contractual because you are storing your customer data, you are storing the customer loan data, loan information. And somewhere I feel that, if you are actually using a third-party system, you should have a better control on that system, right? Because you have to somewhere protect the customer's interest. And I feel it is not going to block the scaling up of any organization. I think it's going to help the organizations for a better control. Yeah.
Sure. Noted your points from both of you. Ajay and Nikhil, I will ask the same question but spin it a little bit. So first is obviously about the regulations and the IT outsourcing and whether it will delay the process of expansion. Adding to it, I would also like both of you to add, when the technology is evolving so heavily, somebody is using psychometric tests, account aggregators will be there, the different versions of Web3, Web5 will emerge very soon, data will be shifted to cloud. So there is no respite for a CDO, CTO, CIO in the company, right? Will it also hamper and delay the process of expansion because ultimately it will somehow divert your attention from scaling up your business to modernizing and advancing your infrastructure?
So I'll break that question again into two halves. The first half is going to be about security, right? I mean, you're talking about outsourcing processes, how controls have to be brought in place. Now, put it this way, for any NBFC or a bank, it's data which is the new money or the oil what you can talk about, right? When you have this kind of an expectation, when you have liquid cash in hand, which is in the form of data, obviously everything needs to be tracked and also audited at a regular process. I mean, have your checks and balances in place so that there's no scope for any risk which you're going to run as an NBFC. And most of it, especially we live in a life where tech is more consumerized, it's more plug and play solution. Gone are those days where people collaborate or sit with only one partner. Today you have n number of partners where you collaborate at a modular level, you try to bring them on board, solve for a certain problem. So it's always better to have that kind of a check and balance so that you don't run into any further risk. Now the second piece is, how do you, I'll twist that question slightly a bit, how do you organize this better so that you can scale rapidly? That's how I would put across. Why? Because what we try to do is, we are very clear about what we really need to be delivering in our next financial year and the next 3 years. And that's how the plans for the organization go about. And when you break it down into year 1, year 2, year 3, you know that what are the things which you need to be achieving in the next 6 months. And between every financial year, before the start of the financial year, which is Jan, Feb, March of the year, we try and plan to what needs to be achieved during the course of the next 1 year and try to achieve it over the period of the next 6 months. So that exercise in itself gives us a lot of clarity as to what do we need to be looking at. The second piece which we've always done and which we believe, which we continuously do as well, is setting up regulatory sandboxes and spaces for innovation where we want to try out solutions, try out POCs, see if it is a solution which is really working for us, and then figure out what is the right opportunity to scale. Some solutions may not be something which is immediate. Some solutions can be far-fetched as well, right? So we've tried to prioritize solutions which are available, and then we take it on what our priority orders are going to be, and that's the way we solve for it.
Yeah, Nikhil. Sure. So I think of this situation as slightly differently. What I believe is these either the information security or any compliance requirements coming from the governing bodies or RBI would ultimately benefit the business. Because as for the normal public, there will be much more control on the data, how it is stored, the information security by the NBFCs, and that will give a much larger confidence to the general public to go to the NBFCs. And that's where probably eventually the differentiator between the NBFCs and banks will diminish with more digitization, more power of NBFCs, and the governance and compliance of the banks. So that's my personal take on it. And I think with respect to the project management part of it, planning part of it, I think it's one more regulatory project. Because unless these things are done, probably no hyperscale can be achieved. Your normal projects cannot be achieved beyond a point of time. So all these projects, all these compliance requirements would essentially be a part of your major requirements. They have to be planned, there has to be a phase around it, and then they have to be executed.
Sure, sure.
I think this can be taken as a lighter sense or serious sense. Since I think Thomas did mention about the annual business plan, getting the thing approved and all, let me be very honest. Earlier scenario, in a normal way, if you raise some budget for some security, maybe you want to have a redundancy for a firewall, something, and all, 100 questions will be asked actually. If it is coming to, it is very difficult to convince a CFO. Now, thanks to RBI, everything and all, now the classes are very clear. You put that point, it goes to the board, approved. So this is another point actually. Since we touched upon Thomas, that ABP part, I think it's a tough on the part of CEOs to get the thing. Nowadays it's all smooth. Yeah.
It's the mandate. Maybe thanks to the hackers. They made the boards and the CEOs aware of the companies that the budget needs to be allocated for the securities. So great. Thank you, Nikhil, Ajay, Prasenjit, and Doctor, for sharing all these remarkable insights. And thank you so much again for listening to us very patiently. And I think I would like to stop here with this scaling up business session. Thank you so much once again for listening to us very patiently. Thank you.